About, I think it was 2 years ago, maybe 1.5 years ago, our next speaker was making a presentation in Prague, was it that? Something like that. And it was the point at which we locally kind of worked out where we might sit in the future. Since then I've been hoping when this event comes that Gabriel would agree to come and speak here, because I think the effect of that discussion, that presentation he made in Prague, gave me commitment and confirmation that there was big light at the end of the tunnel. So first of all, thank you, Gabriel, for driving that. So Gabriel Harris, Director, Head of Acquisitions, CBRE, is going to give us a picture of the market and basically what's going on. Thank you.
Good morning, everybody. Just grab this. We can kick off. So, I'm not sure how many of you know about CBRE. I'm certainly not going to do a sales pitch this morning, but just to understand why someone from a real estate background is standing in front of you. At CBRE, we have a team of dedicated individuals to the data centre sector, 12 of us that do nothing but data centre advisory work. And I head up our team that looks after the occupiers looking for data centre space. So I've come here today to talk to you about some of the trends and demand drivers, certainly that we're seeing in the market. I'm going to kick off today just by looking at the core Tier 1 markets in Europe. And you might say, well, why come to Finland and talk to me about the large Western European markets? Well, if anything, they're the most mature markets. They're the ones that we've been able to track since 99, 2000. And they give us a really good benchmark into the wider data centre market and what's been happening. And I think just in terms of the highlights, particularly over the last year or so, what we've seen is a return of interest from the corporate sector and specific demand being driven by the TMT sector. Lots of technology companies now looking at their cloud platforms. But I think the numbers, in fairness, are quite flattering. The fact that we're about 29% up on take-up compared with this time last year, I don't think necessarily reflects the fact that we're in a buoyant market. It's just the fact that I think there was some requirements hung over from 2011, which were satisfied in the early part of this year and gave us a really good kickstart. The reality for this year in terms of general take-up across those Tier 1 markets, which I should say are London, Frankfurt, Amsterdam and Paris, and to a lesser extent Madrid. Madrid's always been in there just through historic reasons and the fact that it's a very well-connected market. But the four key ones are London, Paris, Amsterdam and Frankfurt. And I think activity has really been consolidated in the last couple of years, much more around London and Amsterdam. That's changed slightly in the last 12 months. London's seen the bulk of take-up and the bulk of activity this year. We've seen a number of large wholesale requirements for the corporate and TMT sector. I think the important thing for me, just in terms of the context of this and why we're here today and talking about Finland and some of the flexible demand that you'll see me refer to, is the fact that today we've actually seen a fair amount of cloud-driven demand actually locate within the non-flexible locations, so the more traditional locations. Amsterdam, probably the most connected city in the world, that's actually taken up quite a lot of that demand. We've seen in London, as I said before, a lot of IT companies, managed service providers rolling out their cloud platform in London because of the large corporate base there. We haven't yet necessarily seen that flood of everybody doing what Google have done, but that doesn't mean that's going to continue, and I'll come on to that in a moment. But that just puts a bit of market into perspective. If we look at, I did this in Prague, but if we start to look at perhaps some of the differences between the Nordic region, and I'm talking about the established markets within the Nordic region, and the established markets in Western Europe. So when we come to the Nordic region specifically, what am I talking about? Well, clearly the hubs in Stockholm, Oslo, Helsinki here in Copenhagen. Actually, it's a relatively developed market. I think when I spoke about the CE region, there are some significant differences, but I think here, whilst clearly the market doesn't have the same size as those very well-established markets in Western Europe, certainly there are quite a few similarities. So in terms of the major carrier-neutral co-location providers, well, the likes of Telecity and Interaction have had long-established locations in Copenhagen and Stockholm. I think Stockholm is probably one of the most successful sites for Telecity currently. And again, that just shows how connectivity is driven. The point was made before around connectivity between Western Europe and then going into Eastern Europe is a key point for those markets. And of course, most recently, Telecity have brought out the Tenny business here in Helsinki, which I think shows a growing interest, certainly in this country and the connectivity provided. Typically, local operators have driven the market here. And so when I came out in 2000 with some of the telcos looking at co-location space, there were probably a handful of local operators. That's all been augmented and grown out by the international operators, but typically it's the local IT companies, the carriers who provided the bulk of the co-location space in these markets. Mainly a retail market in terms of the provision in this market. So if you go into the more established markets, you'll see the absolute cross-section between the wholesale providers like the Digital Realty Trust, Vertus, Infinity, companies like that that do wholesale co-location, large requirements, self-built, and dedicated infrastructure. And by large requirements, we're looking at anything really over about 500 kilowatts. In this market, it's very much driven by the retail providers and focusing much more on the demand, which is for the racks and cages. Core markets have been driven out of those capital cities, and that's no surprise. It's where the corporate hubs are. Most of the technology companies have their bases, the international corporates have their bases, and so the markets are built up through that. In terms of the connectivity side, you've got all the major international players and local players, and so actually they're quite established markets. And I mentioned before just the distinction between perhaps Western Europe and Eastern Europe, and that's where you can see some of the big differences. But here you do have that plethora of international carriers with that connectivity through to both Western and Eastern Europe being positive. And then specification, well, I think given the climate here and the technology, I think very much the co-location facilities are keeping up with the international standards. Moving on to just the segmentation across the market, and again, if you were to look at the really well-established markets, you would see all of these operators present. But this slide, I think, to be honest, just highlights the absolute cross-section of different segments and sectors within an established co-location market. So moving up from the wholesale co-location providers, very much real estate-based companies. They buy the freeholds of their building. The value of their companies is based on the tenants and the covenant strength of their tenants, and against the real estate side, not the additional services they provide. They don't provide typically the additional smart hands, connectivity type services of the other players. And then as you move up the curve, so you get to the more costly co-location providers, but they're providing additional services. So the retail colo guys providing the smart hands and connectivity, right the way through to the managed services providers at the top, who will do everything from the software, hardware, integration and management. And I think, to be honest, more than anything, this just shows the different segments of operators. And probably here in Finland at the moment, you focus much more on the retail and the managed services provision, and not so much clearly yet on the wholesale co-location market. It will be interesting to see how the flexible demand that I've talked about will then drive that supply here in Finland. So where's all this demand coming from? And I think we all, when we go to conferences like this, get thrown statistics of how the internet's grown and the changes that are taking place in the market. But I think clearly the overall growth in IP traffic, just as an example, is just a guide. And Cisco produced a number of reports recently looking at the individual growth within the use of the internet and how that's just driving demand. And so they've estimated that there'll be a 29% compound annual growth rate through to 2016, just in IP traffic. I'm not going to dwell too much on these, but it just starts to create a flavour of where demand's being driven from. Online media, internet video usage, again, really driving some of that use in the internet and data centre use as well. And so, again, 37% compound annual growth rate predicted through to 2016, year on year, in that use. Well, that's clearly going to have a huge impact on the demand for server capacity and internal data centre space. And how's cloud going to affect all of this? Well, I think the important thing is that at the moment, cloud technology, cloud data centres probably accounting for less than half of the overall supply of data centre space. and yet they're predicting that by about 2050 that will change, the balance will tip, and actually cloud data center services will become more prominent than traditional. So, in terms of the demand trends, what are we seeing from occupiers, what are we seeing from the supply? I think it was interesting for me just to put together just how the market is split in terms of demand. So we've actually split it into four categories that we put up here. So you've got your tier one city demand. I've spoken about the really well-established markets. And you'll hear me refer to the server hub mentality. And I think we've seen a number of corporates, a number of occupiers say, look, we probably could go anywhere, but we like the idea that we're headquartered in London, and we like the fact that our data centre is located in London because we can touch and feel it. And that traditionally has driven demand within those tier one sectors. Add on the fact that they are corporate hubs anyway, add on the fact that they've got the world's largest internet exchanges and they're the biggest connectivity hubs in the world, and clearly you're going to drive a lot of demand in those locations. Is that going to change? Unlikely at the moment, certainly we're not seeing it. They will remain established locations. But however, I think new locations clearly will come to play. Location-specific demand, we'll look at that in each of these in turn in a little bit more detail. We've seen large corporates that have locations outside of those core markets where they might have had traditionally IT hubs or head offices where they need to have a data centre close by, and those are not established data centre markets, but they happen to have located their data centres in those specific areas. As I say, we'll look at that in a little bit more detail. Then probably the more important one for today, the flexible demand. The demand that can go anywhere. The Googles, the Facebooks, where are they located? And again, that's very much now driven by new criteria around green energy and flexibility and incentives, not so much around necessarily being close to your equipment, which again is a new sector of demand. And then the final demand, the tier 2 sector, so the more local regional markets. So the Munichs, the Dusseldorfs, the Copenhagen, Stockholm, those regional markets, again, where they have domestic corporates, IT companies, local carriers, again, all generating some local organic growth. So I think I don't want to dwell too much on the tier 1 side, but just to say really that these are the established markets that have the multiple pan-European and global data centre providers, the Equinix, the Telecities, and the interactions, and that just gives you a feel for the types of size and number of facilities. Interesting for me, we often look to the carrier neutral guys to see where they're investing. I think that the real positive for us is just to see what Telecity have done in Helsinki recently, buying out a local business and expanding their footprint. To date, Telecity hadn't gone outside of their core markets. Year on year, they've expanded their core and very, very successful markets in London, Paris, Amsterdam, Stockholm. They haven't gone outside of that. So I think that's a really good indicator for us that they are now looking outside of these traditional markets. And again, further afield as well, there's been lots of talk about Eastern Europe. I think in reality, probably in the next couple of years, we will see something happen there. We're just not quite there yet. But again, the fact that Telecity have gone into Finland is really positive. The location-specific demand, now I've used the UK just as an example, just to make that point. So a really good example, Norwich Uni and now Aviva. Why did they locate their data centre, their main data centre in Norwich in the UK? Well, that's not a data centre hub. It's purely driven out of that location and that HQ location, again, being close to their data centre. And that's, again, just driven some localised demand and will always be the case. So when we get on to the more flexible demand, and we've got some of the main brand names up there, clearly not a lot's going to change in terms of the key prerequisites. You want good quality power, you want good quality fibre, you want access to both of those, and you want to make sure you're in your low-risk location. You don't want to be in a floodplain, you don't want to be on an airport flight path. That's an absolute key. But where are we actually seeing the changes in this flexible demand from perhaps the demand that traditionally is located within those core tier 1 markets? Well, if we look at some of the pulling factors, low taxation. Dublin's been really successful over the last few years in attracting a lot of demand from the Microsofts, the Yahoos, the Amazons. Why? Well, their corporate tax is probably the lowest in Europe. Green power. Key point. Google we've spoken about today. Why did they choose Hamina for their data centre? Well, they've got the low ambient temperatures. They've actually got the incoming seawater. All of those sorts of issues are driving that not the traditional factors. Cheap power not necessarily, green power more important. Timing and speed to market, well, again, not necessarily, not driven in the same way as the data center requirements that traditionally have gone into established co-location facilities because they're built out, ready to go, and can get them up as quickly as possible. This is more about finding the right location with the right conditions, not necessarily about speed to market. And cheap land, well, I think most of us know that in the build cost of a data center, land plays a very small proportion, less than 20%. So no, that's not a driver for the more flexible cloud type demand. And then the local demand, the final point, again, I talked about the local markets. I've also spoken about in Helsinki specifically. But again, these are the markets that continue to grow organically and locally, probably not at the same kind of rate as the established markets, but we're seeing some growth again. We've mentioned the point around Telecity, but established operators like Academica and Ficola here in Helsinki as well. Again, seeing growth just through that general increased use of the internet, and will continue to do so in these markets. So, again, just focusing a little bit in terms of how we're seeing demand change. Now, would I be right in saying that suddenly all of the occupiers that we looked after, and we've acted probably for most of the large investment banks over the last few years, would I say they've all absolutely changed the mentality already about cloud technology and deciding to put all of their data centers into remote facilities? I think the answer is probably not yet, but we are absolutely seeing a change in the way that people talk, looking at modular deployment, looking at how they can split their applications, and I think that's really critical. So if we look at the kind of central prerequisites for what some of the occupiers are focusing on, latency and how close the data center is to provide real-time backup to their applications. This server hugger mentality, the idea of needing to be close to your data center equipment, and the low-risk location, well, they've always been essential prerequisites, and they've driven the market typically to date. Tomorrow, post-cloud, in terms of where everything goes, I think we'll see an absolute split. So you'll typically find, we think, a lot of the corporates say, look, we're running an investment bank, we've got some latency-critical equipment that needs to back up what we do day to day. Yeah, fine, let's put that within 40 kilometres of our main head office building or our main primary data centre, absolutely. But do we really need our backup, our storage, our emails, and all of those servers sitting here in an expensive location where we might not be able to find good access to power, or it's not green power? Is that the right thing to do? And so I think that actually we'll probably start to see a split in the way that they operate. And so the nice-to-haves previously, which weren't on their agenda, suddenly start to change. And then as you split out your applications between those that are the latency-critical ones, I think you have a split of key criteria and priorities from the occupiers, which I think will start to drive their behaviour. Now, I said before, are we actually there yet? And I think one of the key points for me is there's still lots of questions over data privacy, over making sure that cloud technology is secure. In fact, that's something that we'll talk about in the leadership panel in a moment. But I think definitely the mindset is changing. Now, I'm going to caveat this slide that I'm going to put up here quite considerably, because all we've done is really look at some of the criteria that data center occupiers will look at before they go out with a sort of flexible data center requirement. We've looked at some of the indices and some of the research that's done by the likes of the World Economic Forum, some key criteria that they put together, the IFC and the EC, and looked at some of the issues that are important. When a client comes to us and says, look, we could put our data center anywhere, we're not latency critical, we could go anywhere. Let's do a location analysis, compare side by side individual cities. What are the things that affect them? And this is probably a handful of about 10 or 12 items. This is not the definitive guide, and I'll go through when I caveat this just to give you some context, but it starts to put into play some of the key issues. The ease of doing business, what's the regulatory framework like? What are the issues around insolvency, enforcing contracts, setting up a business? How easy is it to do business in a specific location? And all we've done for today, just to start to look at these criteria, is we've said that anyone that ranks in the top 10, and most of the rankings are done between 140 and 180 countries, we'll give a tick to. Anything that doesn't quite make it into the top 10, probably is in the average category, and then anything that's right at the bottom there will put us across. That's probably a bit disingenuous in fairness, because a lot of them as we go through, particularly Finland scores in some instances just outside the top 10, and I'll make that point as we go through. Why have I chosen these particular locations? Well, there's no specific reason, but clearly, if you talk about flexible demand and cloud at the moment, and we do a lot to clients and investors, what locations do they talk about? Well, I've mentioned Dublin already, and that's been a bit of a hub of activity in the last couple of years. But clearly, with Facebook having gone to Sweden, people talk about Sweden. With Google having come here, there's a lot of talk about Finland and buzz about Finland, which is great. And then Iceland probably was one of the first to create a bit of a buzz with the access to the thermal power there. So in terms of what ranks and which countries rank in the top 10, well, Ireland and Iceland make it into the top 10, but again, Finland's ranked 11th for ease of doing business, which in a complete set of 183 countries isn't really bad. So again, that's the caveat here. On the skilled workforce side, so access to good quality secondary education, the skills necessary for working in an ICT environment, 142 countries, and Finland's ranked #1. Network readiness, so the infrastructure, the market conditions, the regulatory framework around connectivity. Finland ranks 3 out of, again, 142 countries, and Sweden ranks first. Corporate taxation, well, the Nordic countries don't typically do that well yet around taxation. Ireland's corporate tax rate is about 12.5% versus 24% here in Finland, it's 24.5%, and about 26% in Sweden. But again, I think in the round, countries are looking at all of the outputs of these criteria, not necessarily one individual. And then the access to green power, the amount of green power available within the country. Interestingly, Ireland, only 6% of their power is from green or renewable sources. Here in Finland's about 33%, and I think Sweden's about 47%. That's still pretty good. And I know that there are movements in place, speaking to the Invest in Finland team, just to increase the amount of green power available here. If anything, I think power pricing, just go on to that, and again, Finland's got the cheapest of the power pricing. I think, what does this show us? Does it show us that any one of those countries is necessarily going to be the next hub more successful than any other? No, it doesn't. But what it does show us, I think, is that the competition is rife between these locations for this flexible demand. So what's the message here then? I think the message is probably more about the USP. And I think what we've heard from the Minister and from the Investment in Finland people is that, look, we are keen to invest in Finland and make sure we attract investment from the data centre sector. And I think if that message comes out, people can see incentives that are available and that the environment is right, that's going to be a key driver. And so to conclude all of this, I think, what are we seeing? Well, I think it's quite clear that we've got our established Tier 1 markets. I don't think a lot's going to change in those markets at the moment. We currently are still seeing a lot of cloud demand being driven out of those established markets. But I think clearly with the onset of cloud technology, demand will become much more flexible. And so the issue now is about finding the locations that have the right USPs to attract this demand. The biggest coup, if you like, is the fact that you managed to get Google here. And as the point was made before, they're a pioneer, people look to them in terms of what they're doing. So they've put really, I think, Finland on the map, and that, I think, creates a great opportunity here for attracting further demand. The final point I put there in bold, build and they will come. Well, I think we can all hark back to 1999, 2000, where the overbuild of supply and the dot-com crash has probably reset people's views in terms of whether you should build speculative data centre space. But I think we've all matured and moved on now. I think this modular approach, and you've seen it here in Kajaani, the modular approach and the fact that there's a track record really helps to put in the mind of the occupiers that there is an established product here and it is the right location for data centres. So I think rather than building significant space speculatively, that kind of approach on a modular basis is what will be most successful. So hopefully that's given a good background, and that actually concludes my session in looking at the markets and the trends and drivers.
Thank you very much. as moderator. So we're going to move on to the leadership panel.